U.S. GDP grew at a 4.9 annual pace in the third quarter, better than expected. The U.S. economy grew even faster than expected in the third quarter, buoyed by a strong consumer in spite of higher interest rates, ongoing inflation pressures, and a variety of other domestic and global headwinds. Gross domestic product, a measure of all goods and services produced in the U.S., rose at a 4.9 annualized pace in the July through September period, up from the 2.1 pace in the second quarter. Economists surveyed by Dow Jones had been looking for a 4.7 acceleration. The sharp increase came due to contributions from consumer spending, increased inventories, exports, residential investment, and government spending. Read more. This is one of the most confusing economic climates I've ever seen. I have no idea what to make of it. I could make a solid case that the economy is about to crash, and a solid case that the economy is about to experience one of its best years in decades. Jerome Powell, why won't you die? Great. More rate hikes are acceptable because the economy can clearly handle this. Fun fact: government spending is counted as GDP. This is real inflation-adjusted GDP, by the way. My lame and unprofessional opinion. It means that so far economy is holding on, meaning Fed doesn't need to rush lowering rates, which is negative news for stocks. On the other hand, if inflation's gonna slow, it increase a chance of soft landing, which will eventually be a good news for stocks since we would dodge a massive crashes and sell-offs. Is this good or bad? Like, it's good. But is good bad right now? If the numbers had been bad, that would have been good a few weeks ago. But is it bad if they are bad now? Very hard to invest without knowing if good is good or if good is bad and bad is now good instead of bad being bad. In the context of stocks, it's bad news. This market is such a joke. Good news crashing my portfolio. The market can clearly fucking handle higher interest rates. If you read beyond the headline, you see consumer spending accounted for 2.7 percentage points. 55.1 of that growth. The personal savings rate plunged from 5.2 to 3.8. Credit card debt is at the highest amount ever in history, and auto loans are experiencing the highest delinquency rate in 30 years. Legit 5 GDP growth should mean a booming economy with people feeling good. Yet people are struggling to cover their basic needs and pessimism seems high. I work remote, so I see this in both the bubble of the tech world and in the real world outside of tech. The American economy is fucking unbeatable. Pat yourselves on the back, ladies and gents. Why is this bad news for some? Does it just give Fed more space for rate hikes? JP, this is horrible news. Credit card debt at record highs. Personal savings dropping like a rock. The Fed, let's keep pushing this thing till it breaks. Interest hikes, here we come. Okay, then why everything is red on the board? This ruined my MSFT, but that AAPL is surely delicious again. We are so back, baby. We're fucking back. Roaring 20s are here to stay, baby. Keep buying the dip, to the moon LFG. Is this from the guns we've been funneling through Ukraine to other regions? How the fuck do we grow in a recession? We want 2 growth and 1 inflation. Nub inflation is too high with no wage growth. Like Gunlock said, it's deficit spending. Look how much we grew with IRA and CHIPS Act, borrowing money we can't afford to pay back. This is all bullshit when you look at our debt and our deficit. Here's how that could be bad news for Joe Biden. New York Times. War economy? Algos have yet to fear the Fed. Meanwhile, wait till the VIX spikes above 35 and the T10Y3M rises above 0. Yields creeping up along with the USD/JPY above 150 and the DXY above 106. Biden knows what he's doing. Freaking awesome. Inflation. Y'all are about to find out. The Fed isn't in this for the small guys. The soft landing is for the one-ers. That's an annual increase. What was inflation? 6? So in real terms a decrease. No matter what you think, a strong economy is not consistent with inflation. I don't normally say this overused sentiment, but I fully believed priced in. We're catching up, and hopefully see the SP get closer to median. Unless the Middle East escalates more, rates will stay this high till March before any thought of cuts come into play. Only if our wages grew with the economy. Can't wait for the GDI numbers that again shows an unusual and increasing gap between GDP and GDI. Variable mortgage rate holders be sweatin'. Everything is fine. Lol. There it's in the last line, government spending. So why is Dow low? 10 mortgage rates, here we come. Thanks JP. Rate increases are so hot right now. Is a lot of this government spending? Or stimulus money still sloshing around? These numbers will be revised, don't fret. Then why inflation? Would imagine this means more rate hikes in the future, assuming inflation doesn't go down quickly enough. On the bright side, does mean I can pick up more shares of American companies for cheaper. See? Everything's fine now to go buy calls and enjoy grocery shopping. I hope I'm not the only one that thinks this isn't good news. Mostly government spending. And yet everybody is poorer. And nobody can buy a house. This is good news for the economy, as it shows that consumers are still willing to spend money, which is essential for economic growth. However, it is important to note that the economy is still facing a number of challenges, including inflation, supply chain disruptions, and the war in Ukraine. It remains to be seen whether the strong GDP growth in the third quarter can be sustained. However, this data suggests that the U.S. economy is in a better position than some economists had feared. They put $7 trillion new bucks in the economy. It swirls around and literally doesn't go away until it goes down the toilet. Yay, but when you back out the inflation rate, how much growth is left? 0. Better do your homework, they're lying. The market is quite literally fake. It sure is weird seeing the exact same chart on 500 tickers that have no correlation or are even in the same ETF. Manipulation at its finest, something way worse than Madoff. Actually, Madoff detailed how to find it. Check the books. It didn't happen then. And it isn't happening now. My wages haven't grown in years though. Making weapons to supply our allies will add to the GDP. If you're part of the congressional mic, the gravy train is up and running. The rest of the middle class have to deal with high interest rates and living paycheck to paycheck.